G'day everyone, welcome back to the Property Trio, the podcast for the sophisticated property buyer. Today we are revisiting our predictions from 2025. Over 12 months ago, we each put some big calls on the table, and now the year's wrapped up, we can and the data's in. It's time to go back and see what actually played out. So in this episode, we'll break down what actually happened in the Australian property market in 2025 on a national level, on a city level, in terms of rents, listings, vacancy rates, and much more, and look at which predictions we got right, if any, which we missed the mark on, and most importantly, why. So, property markets certainly have a habit of humbling strong convictions at times. So let's get started and see what we've learned heading into 2026. But just before I quickly get into our first one, welcome Cate and Mike.
It's great to be catching up again. We've had a little bit of a hiatus and we get in a nice groove, don't we? And then I miss you guys.
I think
you sound
all
extra
had a nice
chipper,
holiday.
Dave. I get the feeling that you've reviewed your scorecards and are pretty happy with the results.
Yeah.
No, not necessarily. I don't. I think it's maybe just, coming off the back of some holidays. Maybe that's why I sound a bit extra chipper.
We'll find out anyway.
Review. I was a bit disappointed with certainly the big one. Which is number one, what will the market do? So in 2025, we had national growth. So we're talking obviously on average across the whole country of 8.6%. So let's take a quick look at what Cate predicted to begin with. And on this one, Cate,
pretty good about this.
You did really well. You trumped. You nailed it. So Cate said the national market will perform better than 2024. So tick, yes. 2024 was 4.9% growth. 2025, 8.6% growth. Cate said a strong first quarter, but second quarter may slow due to the federal election and potential interest rate changes. Now, Mike has commented on the risk of going into detail with our predictions, and that has caught you out a little bit here because actually the year got stronger quarter on quarter, basically.
Yeah, till the very, very end. You're right.
Yeah. So 0.7% Q1, 1.4% Q2, 2.2% growth in Q3, and 2.9% in Q4, basically off the back of the 3 rate reductions. Momentum picked up across the entire year.
Yeah.
So if there is a rate cut in February, the market will outpace 2024. So nailed it. Cate actually nailed when the first rate cut would occur, or suggested if there was one then, and there was one in February.
Yeah, I predicted Feb, I think, on our
I think you did when we get to interest rates, yeah. Second half of the year will be strong, but 2025 will not be a double-digit growth year. So, yes, you got that right at 8.6. So you did very, very well in this section. And final forecast was 6 to 9% national growth. Big tick. So anything to say that's pretty much an A on
so on that note, show's over.
Yeah, show's over. Yeah. Whereas Mike and I were reasonably similar actually in our predictions. So what I've got in front of, so we were probably C's, to be honest. What I've got in front of me here was my final forecast 3 to 6%, expected weaker growth than 2024, which didn't happen. I said the major contributors to 2024 growth were Perth, Adelaide, and Brisbane, which won't perform at the same level again. So Brisbane actually outperformed 2024, but Perth and Adelaide did slide, but not by a lot for Perth. Perth went from 19.1% growth in 2024 to 15.9% in 2025. Brisbane jumped from 11.2 to 14.5. Adelaide slid from 13.1 to 8.8%. And I just commented on how those superstars were slowing down at a rate of knots at the end of the year. What I didn't factor on was that they would pick up again. So Perth picked up from May. Took about 5 months, but the rate reductions, it then started to pick up and flew in the back half of the year. Brisbane didn't pick up till June, and Adelaide didn't pick up till July. So I sort of got that half right, but then did not see the getting them reigniting with price growth in the second half of the year. So Mike's predictions were expects national growth to be 4.9%. 2024 strong performances was driven by Perth, Adelaide and Brisbane, but didn't expect that. Basically, very similar to what I said.
You guys colluded.
we were looking at it very similarly. There's no doubt.
Cheating's only good when you get the right answer, though, isn't it?
That's
looking
exactly.
over Dave's
Marking your
shoulder
exam,
and little did I know he was biffing.
Exactly.
No, look, Cate wins that by a country mile, and honestly, I would concede second to Dave and wooden spoon myself. It was a Hail Mary to give a growth range of 1.9% from top to bottom. But yeah, it definitely outperformed my expectations.
And you thought I was bullish, and it was the top of my forecast, 6 to 9% that was closest to the pin. And like, who knew? I'm not suggesting that we don't put thought into this, but we have a bit of fun with it, and you find out how creative our answers can get when you hear how badly I did on a couple of the other questions. But
let's go to those, Dave.
Moving right along.
I'm not interested in question one anymore.
Yeah, that's right.
No, well done, Cate. I'm keeping a little tally of like Dave, Mike and Cate for points. So 1 point to Cate and 0 for Dave and I for the first one.
Fair call. Okay, so Capital City top performers. So I'll just read through the 2025 results. Darwin grew by 18.9%. Perth, 15.9%, Brisbane, 14.5%, Adelaide, 8.8%, and hang on, I've just moved my marker.
Hobart, 6.8.
Hobart, 6.8, Sydney, 5.8, Canberra, 4.9, Melbourne, bring up the rear at 4.8%. Okay, so, Cate, you said Adelaide would be the top performer due to job growth and lifestyle appeal and affordability. So Adelaide finished 4th.
Yep.
Perth still has growth potential despite some slowdown. So you nailed that, and it picked back up and finished in 2nd place. So that's a tick. Melbourne, you generally put Melbourne in the top 3. Poor old Melbourne finished last. Yeah, but
you both did. I
did have Melbourne this year. I thought it was due. I must admit, I thought there were a lot of the signs showing Melbourne. So Mike, you had Perth as the top performer. So that's close with 2nd. You had Brisbane in 2nd place, not far off. It came 3rd, and you had Adelaide in 3rd, which came 4th.
If Darwin didn't exist, Mike would have nailed it.
Yeah.
I'm
claiming this one as mine
for
those reasons.
Darwin? We had a great listener who reminded us of that. Said you guys.
Do you know? I think
after the predictions for 2025, though.
It was literally only a couple of weeks after too. We did the deep dive, and then we all went, "Yeah, Darwin looks set to rebound."
And you know what it was about his awesome question? It was giving us anecdotal evidence, talking about what was happening on the ground. And it just goes to show data can show you so much. But when you're saying, the property managers are telling me X, Y, Z and the agent's behaving like this, like that is when it's all happening and unfolding. And the data doesn't always tell you until a couple of months' time. And he absolutely knew.
Yeah, 100%. That is exactly what happened. Okay, and then my predictions, I had Perth number 1, but it finished 2nd. I had Adelaide number 2, and it came down to 4th. And I had Melbourne 3, and it finished last. And I did a little right. I said I think Sydney and Hobart will start to improve in 2026, but rather than 2025. So, yeah.
But you've also addressed Melbourne's challenges, the headwinds. You discussed that. This will be from the combination of significant underperformance since the beginning of COVID relative to other cities, anti-property ownership taxes being removed when the Liberal government win the election, and a fall in interest rates. You summed up some of the challenges though, and the issue is that some of those challenges remain. We've had larger building starts, and there's a whole host of reasons why Melbourne didn't perform like we wished it did.
Yeah, I think the extensive lockdowns have a lot to answer for in terms of social disharmony that still lingers and putting Melbourne on the nose to other parts of the rest of the country.
Budget
I'd really
repair
thought
too,
that
right?
would dissipate budget repair as well. Yeah. And the laws. Okay, so in terms of for property landlords. So, okay, regional locations. So, Cate, you went very specific, which made it difficult for yourself. But just high level, capitals grew at 8.2% in 2025 and combined regionals 9.7%. So they just outgrew the capital cities. If we go state by state, WA grew at 16.1%, Queensland 12.6%, South Australia 11.1%, New South Wales 7.2%, Tassie 6.7%, Vic 6.0. Actually don't have Northern Territory there for some reason. Apologies to those in the regional Northern Territory. Okay, so let's look at Cate's predictions. So, Cate, you started with Townsville being a top performer. So Townsville actually had part of its, I think it's SA4 area, actually part of where we went through on our big caravanning trip. One of my favourite towns on the trip, Charters Towers, which just sits inland from Townsville. So Charters Towers are in Ingham region in the Townsville sort of general SA4, grew at 16.4%. So that was the ninth highest growth area in the country. So I'd say you're around the mark there.
Yeah. And you know what? This is where being an area specialist shows me up, because as soon as I get out of my own state, I only know what I know. I'm not an analyst that studies every market. I know people who do, and I, give them credit for that, because that's not what I do. I study Victoria. But I had a friend who was trying to buy in Townsville, and he leaned on me, what does the agent mean by this, and what's wrong with this property, and, these are the offers that are coming in, and this is what the agent said, should I submit X or Y? Like, he was just really leaning on me. And I made a few phone calls and coached him from the sidelines and thought, my gosh, this is like Ballarat during the crazy property boom. And we know what Ballarat did during that year following COVID lockdowns. It moved at 25 point something %. And that's a huge amount of capital growth movement for any region. And Townsville just had that vibe. And so that's all I did. It was anecdotal and it was, based on an experience that I was having.
Yeah. Well, so it landed around the mark. So you did well there. Tasmanian regional areas, you said expected to grow in popularity with retirees and lifestyle buyers, but unfortunately Tassie finished 5th out of 6. And you said Gold Coast continues to be a strong performer. Yes, so it had 2 subsets. It made it twice into the top 10 for Queensland, but not in the top 10 for national. So the Ormo, Oxenford area grew at 15.6% and Nerang 14.7% growth. So, you probably 2 out of 3 solid outcomes. Probably a B plus, I reckon, for your predictions.
Okay, I'll take that.
Interestingly, when you look at growth percentage per state, and a bit like what I wished I did with the question 2 was to forget about Darwin. 2nd, 3rd and 4th is Perth, Brisbane and Adelaide. And we look at the top regions, WA, Queensland, South Australia, it follows the same pattern.
Yeah, which is pretty much what I went with here with my predictions. And yeah, although I did push up Queensland, so I actually managed to nail this one. But I'll start with Mike's first. So Mike
Dave, I mean, I know you're in a hurry to bank the point, and fair enough, I'll give it to you. And this actually makes us neck and neck so far.
Even,
We've got a point each, which is nice. But yeah, talk to us about how I biffed it.
Yeah. Look, you weren't too bad, to be honest. Regional Queensland, you had it as number one. It came second. And you commented on Townsville, Toowoomba and Mackay as key growth areas. Townsville was fourth for Queensland regional areas, Toowoomba third, Mackay ninth. So, yeah, around the mark there, pretty close. Regional Victoria had as number two because of affordability, but unfortunately Vic, brought up the rear. And but Mildura was in the top 10 Australia-wide. So there was some strength in Victoria. Regional news.
If I'd mentioned Mildura, though, wouldn't it?
Yeah, you would have not. That was actually number 4. Mildura had growth of 19.2%. So I don't know if you have any intel on why Mildura had that kind of growth, Cate.
I don't. Other than a lot
close
of
to Adelaide.
It's just about furthest north in Victoria. So climate, there's wine region. There's some nice tourist attractions.
I don't want to assume that it's all investor activity, but what I do know is that there has been a lot of strong investor activity. Mildura offers some really good rental yields and lower priced properties. And if you talk to anyone who's utilising the services of one of these hot spotters that's putting out, growth areas for investors who are chasing quicker returns, it's been a popular one. So I don't think that Mildura's growth is entirely apportioned just to investors, but I think it's had a lot of investor activity.
Yeah. So, and then New South Wales you had as third, which finished fourth. So, yeah, look, I mean, probably a B for you there, Mike, I'd say.
Yeah, probably better than a bank has done for the year. But, I'm an esteemed company here. So, to take out the gong for this one, you've got to be pretty damn close.
So I had Regional WA as number one, following Perth's performance. It came first. Regional Queensland as number two, due to consistent demand from migration. So I bumped that up a bit higher than I had Brisbane, for example. It came second. Regional South Australia aligning with Adelaide's performance, as you mentioned. I certainly aligned what I expected from the capital cities, except for Queensland, because I think it has extra strong regional migration demand. So, yeah, look, I picked the top three there, so I did okay. I think I probably win that one.
I've already given it to you, Dave. It's one each.
Yeah.
Neck and neck.
Yeah. All right. So as we move into prediction number 4, and we'll remind our listeners there are 11. So there's no way possible that there can be a tie.
Prime numbers, like it was always on
there. I guess there could be with 3 of us. There could be 5, 5 and 1 or something like that. But yeah, prime numbers and all. Okay. So investor numbers. So the number of new investor loans for purchases grew by 12.3%. The dollar value actually jumped by 18.7%. And in terms of the percentage of investors versus owner-occupiers for purchases, that increased from 37% of all property buyers to 40.6% by the end of the year. So overall, definitely a growth year for investors.
the year of the investor.
The year of the investor. So if we work it off the number of new investor loans for purchases, 12.3%. Cate, you did say investor numbers will increase, surpassing 2024 levels. And it'd be higher than 10% growth, so you nailed that. You said higher rental yields and falling interest rates will encourage investment. Well, actually, capital growth outperformed rental yields.
It did.
Rental growth. So rental yields fell in every capital city except for Sydney, which just stayed the same level. And you suggested stock market volatility may push investors towards real estate. The stock markets were pretty strong for 2026, but there was some volatility, no doubt about that. So they're pretty, the core one, higher than 10% growth, you got that.
On that stock market volatility, I think Kate would have been wrong if AI wasn't in the mix, because there is an index of US volatility, and there's a couple of really interesting measures. There's sentiment surveys. There's, it's basically how much is Trump's unpredictability unsettling the market. And we've seen a few different cycles of that, but the volatility index was high, but the stock market volatility normally sort of is the opposite. But there's some commentators saying because of the absolute gold rush in AI, that kept the stock market a little bit flatter. So it'd be hard to pick too much fault with Cate on that one. And at the end of the day, higher than 10% growth, and it was 12.3. I think she's got this one.
Yeah, I think Cate's got this one. So, Mike, you predicted a 10% increase in investor activity. So not far off the mark. Cate just said higher than 10%. So
yeah,
the nuance of the language.
Someone says 200, and then Cate said 201, and it was 205. So I lose.
Yeah. That's right. I said 5 to 10% growth. So we all had growth, but yeah, Cate certainly nails that one. All right. So number 5, was there going to be any government intervention in the property market? Well, yes, there was government intervention. So I'll go to our predictions. Well, actually, I'll touch on the interventions first. So the first home guarantee got expanded. So that was announced in April 2025, and then it got brought forward to October. APRA did the debt-to-income caps, which was November 2025 announcement that banks must limit their high debt-to-income loans to no more than 20% of loans. So that was at 6 times your income. Can't borrow more than 6 times your income unless you're lucky enough to be in that 20%. Combating delay in council approvals for dwellings was a big theme. So the federal government announced actions to cut approval delays and red tape that slow housing delivery, including streamlining environmental approvals. These are all aimed at making it harder for local councils across the country to slow up approvals, new approvals. Yep. So the New South Wales Parliament passed the Planning System Reform Bill in 2025 to simplify, speed up and modernise approvals, again aimed at councils. Victoria also passed the Planning Amendment, Better Decisions Made Faster Bill, introduced in October 2025, again to cut red tape, speed up decisions and address outdated council-centric rules. Finally, in WA, they also, on November the 17th, flagged reforms to fast-track higher density in housing development. So there's a bit of a theme there, isn't there?
Yeah. And Dave, you got this one.
Yeah, I think I got this one.
You did. The only thing that you said, if the coalition wins, they may allow first home buyers to access super to get into a first home. It'll be one part of the platform for the election when it comes to housing. And look, that we're yet to see what some of the promises will be from what is no longer the coalition. But I think you're focused there on, that was the only one you didn't nail, but you were talking about first home buyer opportunity, and look what's happened. We've increased the places for the deposit scheme. And then you said federal and state governments will continue to look at ways to incentivise building new stock. They'll continue to minimise the number of hoops that developers need to jump through and find ways for them to skip local council's approval on occasion. Absolutely nailed that. And they'll be improving incentives for investors to get behind the build to rent, and the Labor government, if they remain in power, is likely to look at incentives and ways to increase returns for those purchasing new property. Pretty close to what's unfolded, certainly more insightful and more detailed than what Mike and I said.
We really phoned that in, Cate. Like, I mean, I said no major changes expected. And look, I don't see anything that's happened as a major change, really. Like, where is the impact of these faster planning things? I mean, we saw a 1% rise last week for the December quarter for construction costs, which is the highest of the year. But it's still the slowest pace of construction cost growth since, I think, 2022. But yeah, like we both gave 2 lines. I think if we'd thrown a little bit more at it, we might have had a little bit more of a chance. But rightfully so, Dave's got this one. So you guys are on 2 points each, and I'm wooden spooning it on 1.
Right.
One of your comments was interesting, and if you get into the nitty gritty of all of the media articles and the quotes that are flying around out there, the government may highlight rental growth slowdown as a success. There are plenty of people pinning their hat on the markets where rental growth has slowed, as successful implementation of new housing policies. But I love that little dry line came from you, and I said potential investor restrictions if investors limit first home buyer opportunities. And I would argue that APRA have just given us a little bit of a stir there, and a slightly veiled threat that they have the power to do that. But I was wrong when I said APRA may reduce the 3% serviceability buffer. I've been waiting for that for a long time, and maybe it's not going to happen.
Yeah, look, I think you both made some pretty reasonable comments there that hit the mark in some places. To be fair, I've been banging on about how governments were going to make it easier to build for a couple of years now. So none of that surprised me that state and federal governments are aligning to try and make it easy to build and put pressure on councils. And I only think that's going to continue. And it's starting to play out. So if we move on to our 6th prediction around new builds, developers and building. So for the number of approvals for new builds, that jumped by 14%. So there's some things are starting to happen here. I don't know if you have these numbers or just I do. For the number of new commencements, that jumped by 10%. Okay, but completions, actually finishing the builds, they fell by 2.1%. So the pipeline's building is the point there. Approvals are up 14%, commencements are up 10%. Okay, but they're not going to be finished built for next year, 2 years, 3 years, those approvals and commencements, if they're built in a timely fashion. And if the approvals actually go through to being built. So, but unfortunately, the actual number of, and these are like the best data numbers we have. So, approvals is December to November, commencements are December quarter to September quarter, and completions December quarter to September quarter. All right, so I think we probably need to get more specific with our predictions here, because the key numbers are around approvals, commencements, completions, and I'm not really sure what our answers refer to.
That.
Yeah. So
because
you've
guys
said
are very specific, and I just said they'll increase, which I don't get points for this one.
Well, let's talk through what we said and decide. So Cate said building starts will increase. So yeah, they did. They did increase. I think you said 5% and it was 10%. Yeah. Victoria will have a big push for new builds. I think that's fair to say. They changed some legislation to make that easier. More renovated properties will enter the market. What's your take on that, Cate?
Yeah, I would argue that they have, and not as a mix. Not because more renovators are pushing property out. It's because the wash of disenfranchised investors who were sitting on older stock, your cash-rich, cash flow poor investors who just said, well, I've got this house and I haven't got enough funds to bring it up to scratch, and it's now not meeting the minimum standards. I have to sell it. We had an absolute wave of that category of investor through 23 and 24. And as they sold their properties and that wave moved on, it changed the balance. And so as a percentage in the market, the renovated property count increased in my view, and that is anecdotal. We don't really register that information. You can't
gets
easily
recorded
get it on
anywhere.
PropTrack.
Yeah. Okay. And so, Mike, you predicted new housing targets will not be met. So I assume that's completion. So yes, big tick.
Yeah, well, I mean, I was just talking about the 1.2 million homes, like 240,000 a month. We're averaging probably 170,000. It hasn't really moved from 1 July 2 years ago when it actually started.
No, that's right. Government support will determine the final figures. Predicts a 7% increase in new builds. So commencements were 10%. So you were closer on that mark. I said building numbers would increase by 6%. So if we relate it to commencements, Mike is the closest at 7%. I said a real impact won't be seen until 26 to 28 rather than 2025 because of all the red tape, higher interest rates, some states having disincentives for investors, which will still continue to be stripped away through 2025. Construction costs will remain elevated, and investors should consider build age and maintenance costs in property selection. So,
good comments. You probably win the comments section, but I'm gonna claim it on just sheer numbers because then we're two apiece, which is sort of good for the narrative of the show as well.
All right, we'll give you that one, Mike.
Yeah.
Though Cate and I reckon both could get half a mark, to be honest.
No,
all right.
It's you win, you get a point. There's no points for second place, Dave. This is a primary school.
That's the system of scoring impacts the outcome. just like a Brownlow medal. All right. So if interest rates was number 7, so that's a big one. Okay, so we had
one, right?
Yeah, 3 cuts. We had 3 cuts for 0.75. So, Cate, what did you predict?
I predict 3 cuts in 2025, totaling 75 to 100 basis points, with the first cut being in February.
Yeah, well, that's going to be hard to beat.
Yeah.
Mike?
So we're both there, yeah. So we Cate said 75 to 100 basis points. I said 50 to 75, and you said 75 to 100, and we got 75. So everyone was kind of right within a 0.25. You and Cate,
2 cuts.
Yeah, see, that's the thing. And Dave said 3 to 4. So whilst Dave and yourself got the number right, you were the only one to specify exactly 3 cuts, whereas Dave was 3 to 4.
And when?
Yeah, I think Cate has to have that one.
Yeah, she definitely. But if we had a vote, if we had a 3-2-1 voting system, or or some sort of different system,
maybe I got it entirely right, and you guys got it wrong.
Yeah, we got nearby.
Next year, I'm contracting the Russians to interfere with polling.
All right. So with our voting system, what are we at?
3 to Cate and 2 apiece to you and I, Dave.
Oh, gee, I've slipped down with you, have I, Mike?
Yeah, I know.
All right.
To the gutter.
Well, all right, number 8. So this is rents and vacancy rates. So for 2025, rents grew by 5.2%. In the capitals, rents grew by 4.8%, and the regional 6.2%. And then vacancy rates, they stayed at the same level, 1.2%, record lows. There was no easing across the year. Okay, so Cate, what did you predict there?
I said that rents would increase in all capital cities. So what I was meaning by that is based on 24 to 25, that'll increase. So I got that wrong. And I also said Melbourne and Adelaide would remain tight while others normalise. Got that wrong as well. Now, you guys cited numbers, which, reinforced you getting it right, although you weren't quite there. I note to self, next year I have to cite numbers as well. We all need KPIs on this stuff. We need things that can be measured.
I think we did do better for our prediction. I mean, that's already live, right? And we were just kind of thinking about how do we reduce the squabbling over the scoring that we're about to record in this episode. And that hasn't disappointed. Like, Dave's already questioning my voting system.
I'm just mucking around.
I got this one wrong though. I really thought that they'd continue to tighten. I thought that continued pressure on housing availability would bite, but we've had other cool breezes that have taken the heat out of that. Some of that being an increase in investor activity, and
Look, I think
the number of people in a house, so our formation rate. We've got a lot of things that have eased the pressure on rents. We haven't solved the problem, but it's not as colossal an issue as it was a year and a half ago.
Yeah. Well, look, Mike predicted national rental growth 3%, and obviously it was just over 5%. Vacancy rates at 1.6%. They stayed at 1.2%. Whereas I had rental growth 1 to 3 or 2%, and vacancy rates 1.8%. So Mike certainly beat me. So, but did you say, I've got here, Cate, you said nationally 3 to 4% for rents.
I thought I did, but when we're looking at the notes, we might have to take that offline and check the camera, because I thought I was giving numbers as well. But...
Yeah. All right. But look, we'll give it to Mike, given he was a little close on vacancy rates perhaps.
Yeah,
but I think it's a toss of the coin for you two. So that moves me to last position.
I need all the help I can get, so let's do it.
All right. We've only got 3 predictions left. So sales volumes and new listings. So sales volumes were up 4.9% over the year compared to according to Cotality. And new listings were slightly below the 5-year average. So more properties sold, but less properties came on the market. Hence, prices go up. So that was roughly on par with the 24 level. From January to March and November to December, but from April to November, so in the middle of the year and early spring, new listings dropped.
Yes.
And then total listings are still well below the 5-year average. So what did you say, Cate?
Strong half of 2025. The second half will slow, bringing sales just below the 5-year average.
Okay, so number 10 prediction, risks which could impact the market. So, Cate, what were your predictions here?
I said low migration, economic downturn, and APRA restrictions.
So migration is slowing, but still above pre-pandemic levels.
Yes.
Yeah, I mean, it's slowed massively, but I don't think it could qualify as low.
Yeah, I agree.
And, impacting the market, or are we really talking about shaking up and threatening the market? It certainly hasn't done the latter.
In terms of economic downturn, what would you say, we had an economic downturn or not?
No, we haven't. We've got some real challenges with inflation. But, GDP is not a mess, and employment or unemployment, that's not a mess either. So I think anyone would argue that 2025 was not a year of economic downturn for Australia.
Yeah, fair enough. And then here you did say APRA restrictions were a risk. So obviously APRA announced a change late in the year.
Yeah, and they've been posturing as well. But I think that just keeps us all behaving.
So, Mike, you said global conflicts, I'd say tick.
Yep.
Trump.
Just Trump. That's it. Full
You and
stop.
I have to say tick.
That's yeah.
He's impacting markets, so fair call.
Yeah. China-US trade, tick.
Well, that's the tariff sort of stuff,
Everything
I suppose, to
US
some degree.
trade.
But it was way bigger than China.
Yeah. Insurance issues.
Yeah.
Well, it was one of the bigger categories in the CPI sort of basket of goods, leading to sort of some inquiries into that. So, I mean, I'm pretty happy with that, to be honest.
Yeah, I think they're pretty good risks, and most of them played out to some degree, fair degree. I said productivity declines. So I don't know if it actually declined more, that potentially just stayed really low.
I think so, yeah.
Historical lows.
I mean, like you've talked a few times on this show about productivity being a big problem in Australia, but maybe scuppered yourself with the wording. It has declined and is at a low base, but you sort of said it will decline, which sort of begs the question, like, has it declined further? So that's a hard one, Dave.
No, that's probably the wrong word. Productivity. I've got to say, productivity will remain a problem. That would have been a better way to say it. Excessive government debt. I think that's still a fair call. China relations.
They probably have been maybe a little bit quieter in 2025 than other years, mostly because, Venezuela, Iran, there's been a lot of other focuses. I mean, even
circumnavigation of the country.
Yeah, Greenland. It's just, China's sort of taken a little bit of a back seat. I think you were definitely talking about the potential invasion of Taiwan a couple of years ago. I don't think you necessarily mentioned it for 2025, but it's always that kind of sleeping idea.
Yeah, I think it's more just the broader impacts in terms of trade. And then I guess... they circumnavigated our country, I think, for the first time with a flotilla that was picked up by Jetstar.
Isn't that good? The first line of defence is a Jetstar captain somewhere over the Coral Sea.
Did you know there was this live fire off the east coast of Australia, guys? Oh, no, we didn't. Oh, thanks for mentioning that to us. More taxes on investors becoming the norm for state governments, which could put a handbrake on property values.
Yep.
There wasn't really more, though, was there? There was already a lot. It's another sort of semantics thing, Dave.
Yeah, too much detail. There is incentive here as they potentially have shown a way to suppress values. Yeah, so all right. So I think, Mike wins that one and hits the lead going into the last prediction for inflation. So Mike 4, Cate and Dave 3. All right. I've got no idea who wins here. So let's pull back the curtain, shall we? Inflation. So the annual trimmed mean inflation was 3.2%. And drum roll, if you will, Jamie, insert. Cate and Mike had 2.5 to 2.28. I went just under them, 2.4 to 2.7 to be slightly different. So I guess we have a winner who may have pre-planned this scoring system, by the way.
I actually thought you won. In fact, I looked at it ages ago and I thought that you actually won. Oh, yeah?
So I've got here what ChatGPT said.
Let's hear
it. Let's do it.
So it goes, all right, we've got the scorecard. So it said, Cate finished with, this is the way ChatGPT measured it. Cate finished with 3 correct, 6 partials, and 2 misses. Mike finished with 2 correct, 6 partials, and 3 misses. And I finished with 4 correct, apparently, 5 partials, and 2 misses.
So that's what I'm talking about, the unreliability of ChatGPT, Dave. It's just absolutely getting it wrong left, right, and centre.
I'm beginning to trust ChatGPT more and more.
I wonder.
Right now.
Yeah. Look, I think this isn't, as you say, this isn't really about winning and losing. And I think like just the fact that we're all very, very close, I think is pretty impressive. Some of the things we got, a bit embarrassingly wrong, but we weren't that far off in taking the pulse of what was a very difficult 12 months to forecast. So I think we all did pretty bloody well with that one.
Yeah, 100%. So ChatGPT had us each getting 8 or 9 correct or partials, shall we say, and only 2 or 3 misses each.
Not
So
so bad, right?
yeah, that's right. So as ChatGPT said, no blowouts, no wipeouts, and no clear winner. Just a lot
What
of
I
good
love
calls, a
about-
lot of near misses, and a few that didn't land. And that's the
and
reality
lots
of
of fun.
forecasting. And lots
And
of fun.
it's a great chance for us to talk about what we perceive the headwinds and the strengths of the market to be, and what are the drivers of them. And we come from 3 different coal faces, and the really fascinating thing is seeing the things that each of us have absolutely nailed. It's not sheer fluke, although I did predict that the interest rate cut would come in Feb. I'm no economist, and that I reckon that win was a shallow one. But the things that we see on the ground, and you talked about insurance, Mark, and Dave, you talked about some of the interaction that that APRA can have in terms of lending policy and the flow of credit. And that's what's really valuable about the 3 of us. We get along, we have a lot of fun with it, but we're happy to talk about where the perception comes from. And I think that's what our listeners care about.
Yeah, well said. And I think like every time we've done this, we've gone like, oh, next time we need to do this better, and we've uncovered a few issues. But I think we had that mindset in place for our 2026 predictions. So I encourage people to listen to that. I'm pleased to report that whilst it's actually a very negative thing, much of my predictions have come true already. That is the natural disasters having an impact on 2026, which feeds into construction activity and insurance and those sorts of things. But I feel like when we get to the back end of this calendar year, it's going to be a lot more specific. I don't think Cate and I phoned in our responses like a couple of the ones that we did, and I think we forced each other to account and to put a number and specifically say, is it headlined, is it trim mean, that sort of stuff. I think it'll be more fruitful at the back end of 2026.
Yeah, I think it's a good call. I think each year we've sort of refined how we approach the predictions to make it more measurable, and there's still probably another 20% we need to tweak, isn't there, to get very specific. So, and I see, ChatGPT actually produced a table for our score totals and how it measured it. So maybe we'll put that up on the on the socials as well. Awesome. Well, thanks everybody, and just a reminder: we are doing a live podcast in early February at Latrobe Golf Club. So please, if you'd like to come along and be part of that live recording, tickets. Early March. It was going to be February, but we pushed it back, didn't we?
Early March.
Yeah, early March. Sorry.
And
I
want to do a little shout out. I've had a few people let me know that they're coming, which is really exciting. But yesterday, I got a lovely message from Guy. So shout out to Guy. We can't wait to see you and meet you. He's flying down.
Oh,
wow!
Awesome.
Yeah,
that's awesome.
How awesome's that?
Well, we better include.
We better
him
put
in
on
the
the show,
VIP, VIP group.
Can't wait.
Superb.
So on that note,
on that note, we'll look forward to seeing everybody next week.
Yep, links in the show notes. Get on board. See you guys.